Hi everyone, Ray Olson here. I'm back to share some quarterly insights on stock market performance and current economic conditions. But before I begin, please note, portfolio allocations and investments are not adjusted in response to market news or economic events. However, we evaluate and report on market and economic conditions to provide our investors with perspective and to put portfolio performance in proper context. And look, remember, when it comes to investing, you're better off having a logical approach, basing it on evidence, diversifying, and focusing on the long term. Okay, here's what we saw in the first quarter of 2023. During the first quarter, global stock and bond markets continued their upward trends from the previous quarter. The S&P 500 index started off the year with strong performance and was able to stay in positive territory to end the quarter after shrugging off some late period volatility based on by the fallout from the collapse of Silicon Valley Bank. Bond markets also benefited from a flight to quality when yields plunged as investors sought refuge while assessing market impacts from the banking sector turmoil both at home and abroad. The result was positive performance for the quarter across all major asset classes. For the quarter, U.S. stocks gained 7.2%, international stocks gained 7.6%, and emerging stocks gained 3.9%. U.S. interest rates increased during the quarter as the Federal Reserve raised the target range of the federal funds rate from 4.25% up to 5%. However, markets are pricing in expectations of a 0.25% rate cut at their next meeting in September. Now, let's talk about our economy. The final reading for fourth quarter annualized GDP growth of 2.6 showed an expansion of economic output, but a slower pace than the prior quarter. The unemployment rate inched up only 0.1% from the end of the last quarter to 3.6% through February. Headline inflation is measured by the CPI, closed out February with a reading of 6%. Now, what about financial markets? Domestically, all size and style equity categories were up during the quarter. International developed stock markets also posted positive performance. For U.S. investors, international stock returns were positively impacted during the quarter by the weakening U.S. dollar. A diversified index mix of 60% stocks and 40% bonds would have gained 4.5%. And remember, Buckingham's evidence-driven investing portfolios are strategically invested with a focus on the long-term performance objectives. Thanks for listening, and I will see you next quarter.